Green lights. You can see times around 6:54. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis. As today is Nifty Sensex expiring, let's look into Nifty 50 trade analysis, guys. You can see the market gapped up, and initially the market after gapping up, I plotted the image of the first candle, and you can see huge bearish engulfing candle. And uh, after this retracement, price rejected from VWAP levels, the anchor VWAP level, as well as the mid of the first candle, which I have posted you the live video also, which I have told you to take short position right after this candle formation. And you could have easily taken short position here, keeping your stop loss just below that candle. So this is the trade which I have taken live, guys. I have taken two trades here and another trade over here. And you can see the market broke even this low, which I have already explained to you in my live trade analysis. So this is the breakout structure over here, and the market retraced. And if you try to plot these levels over here, the common point between this to the common point between this, you can see price rejecting from 0.38 level over here. This is the 0.38 level where price was rejecting. This is the 0.38 level where price rejected from that level. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market reached all the way to 100% move here. This is the 100% move, guys. And the market reached and took support from yesterday's close level. So this was the 100% move as well as the yesterday's close as well. You can see this is the yesterday's close. So the market here reached all the way to this 100% level. You could have traded all the way to this zone over here, as well as the yesterday's close level, and the price took support from here and rallied all the way. And you can see the market targeted all those sellers who might have entered here, expecting the market might continue further selling towards the downside. But you can see how the market targeted all those sellers who have entered here with this kind of huge bullish momentum. And I also told you that the market clearly broke this high, forming a chalk here. You can see with just two candles, 2 to 3 candles, the market clearly broke this structure and formed a chalk over here. And what I was expecting is that the market might retrace to this 21 as well as the 9 moving average or the day VWAP level, or anywhere between the 0.38 level or the 0.5 levels. You can see this kind of retracement, guys, where the price didn't even show any sort of retracement. Or what I expected is that this PDRA, you can see there was fair value gap, inverse fair value gaps. As this is a PDRA, guys, where you could have easily expected price to retrace to this levels over here. After this breakout structure, market would have retraced and continue further bullish momentum. But you can see this kind of rejection candle where I thought that price would retrace towards this 9 as well as the 20 moving average or the daily VWAP level. But the market didn't retrace, followed by another bullish engulfing candle over here. And this is where I told my traders to enter long position, which I have already posted you on the live trade analysis. And you can see the market here after this kind of huge bullish engulfing pattern broke even this high over here. So you can consider this another breakout structure. And if you consider this impulsive momentum, guys, so if you consider this common point between this to the common point between this, you can see price retraced all the way to 0.38 level here. This is the 0.38 level, guys, where the price retraced. And if you try to plot the anchor VWAP levels of this low, you can see price taking support from 0.38 levels, rejecting price, and even the anchor VWAP level forming some sort of support over here. So this is where I have told you to take trade. So if you try to plot the fib extinction levels from the common point between this to the common point between this to the common point between this, and this is where I have traded, guys. I have traded it all the way to 1.68 level. So this is where I've told you to exit, and this whole trade analysis which I have posted you on my live trade, you can go and check in, guys, how I traded this position. And after this kind of huge bullish candle, you could have tried your stop loss all the way to this zone. So once if this low has been broken towards the downside, you could exit your position. You can see in case if the market sentiment would have been bullish, no, guys, I have exited my trade after seeing these 3 cow candles. So what I expected here was that the market after this kind of huge bullish momentum might take support here and continue further towards the upside. But what happened is that you can see this kind of huge bearish candle which even broke this low as well here, forming a chalk over here. This you can consider to be a chalk formation. And you can see if you try to plot the fib levels over here, the common point between this to the common point between this, you can see price rejecting from these levels itself, the 0.38 level here. This is the 0.38 level where the price rejected. This is where the price rejected and continued further selling towards the downside. But here there was no clear chalk formation, but definitely here with this kind of huge swing momentum, there is a clear break of structure here. You can see this clear break of structure. So in case if you try to plot the anchor way up levels over here, after seeing this kind of rejection candles from 0.38 level, you could have easily entered short position here, guys, keeping your stop loss just above this candle itself. I think this is quite risky trade, guys, but in case with a minimum amount of stop loss, you could have easily taken. So if you try to plot the fib extinction levels of this swing momentum, the common point between this to the common point between this to the common point between this, you could have traded the 100% move, or you could have traded the 1.68 level, or you could have traded all the way to the mid of the mid of the first candle. This is where the price rejected. You can see after this kind of rejection of price from lower levels where you could have easily exited. So you could have tried all the way to this zone, guys. This is where you could have tried. And if you consider this whole swing as one momentum, so if you consider this high to all the way to this low, you can see price rejection, price couldn't cross the 0.5 as well as the 0.6 level here. This is the golden zone ratio. This is considered as the 50 level over here. Or what you can see is that in case after this kind of huge bullish momentum, you could expect the market might continue further bullish momentum. But what happened here is that you can see clearly here the market broke this high, forming a chalk over here. So forming a chalk over here. So let's take this out. So if you consider this kind of momentum and the market retraced and formed another bullish candle like the previous candle over here, and you can see again the market retraced to this demand zone, again formed another bullish candle over here. But what happened is that you can see these two reversal candles here, guys, and the 50 level. In case if the market sentiment would have been bullish, the market would continue like this, and the market would form support and continue like this, guys. This kind of candle would have never appeared. Even if this candle appeared, you could have expected another huge bullish candle following. But the break of this 21 moving average as well as the 9 moving average towards the downside is where you could have changed your perspective from being bullish to bearish. And you can see this kind of rejection candle from the 9 moving average. Here is where you could have easily entered short position, keeping your stop loss just below that candle, guys, and you could have traded all the way towards the downside. So if you consider this whole swing momentum, the common point between this to the common point between this to the common point between this, you could have initially booked your profit at the 100% level here. This is the initial target you could have exited. And after this kind of market took support from 100% move and rallied upwards, but faced rejection from the 21 moving average where the price couldn't cross this 21 moving average, and it rallied all the way to 1.68 level. You can see here the price rallied all the way to this zone. This is where you could have easily exited, guys, the 1.68 level. 1.68 level, even breaking yesterday's low as well. You can see how the market even broke yesterday's low. So you could have targeted all the way. You could have targeted all the way to here, guys. This is where you could have easily targeted. This was very good trade setup. Initially, you could have booked here. After rejection of price, you could have entered another trade over here. And you can see here the market clearly broke another structure over here. You can consider this to be a breakout structure. And you can see how the market retraced over here and faced some sort of resistance from this 200 moving average. So if you consider this swing momentum over here, the high of this candle to the low of this candle. So if you try to plot the 50 levels over here, this is the 50, guys. And you can see if you try to place plot the fib extinction levels, the common point between this to the common point between this, you can see the market didn't retrace to the 100% move here. And you can see the market came all the way to these pivot levels and faced rejection. Or you could have targeted this low, guys, or you could have easily traded as long as the market is trading below the 21 moving average. Here is where the market actually broke. So this is where you could have easily traded. This is for just for confluence, guys, in case if the market reversals towards the upside. This is, you can see this kind of balanced momentum and this trendline liquidity as well, clearly showing some sign of bearishness. Once if this trendline liquidity broken, you could have entered another short trade over here, and the 50 levels of this swing momentum is where this, and you could have easily captured this move as well. So if you consider this swing momentum now, guys, the common point between this to the common point between this to the common point between this, You can see the market came all the way to 100% level here. This is where you could have easily targeted. This is what I am saying, guys. Once if this trend line liquidity has been broken, so in case a short position here, keeping your stop loss just above that candle, and you could have targeted all the way to 1.68 level. This is what I mean. You could have added position here. You could have another added your positions here as well. And you can see after this kind of 100% move, the market formed a double top here, double bottom, sorry. And you can see rejection of price from these levels, guys. Clearly showing some sort of demand over here. You can see this kind of huge engulfing pattern here and forming a double bottom here. So in case seeing this, you could have entered long position here, keeping your stop loss just below that target, and you could have easily aimed this high as well. But this is quite risky trades, guys. You never know that the market would continue further bullish momentum. But definitely, if I were there, I would have definitely taken this trade, keeping my stop loss just below that candle. But you can see here the market clearly formed a shock over here, guys, with this kind of huge impulsive bullish momentum over here, and the market retraced here and formed another you can see this kind of retracement, guys, clearly signifying some sort of bullishness. And in case if the market sentiment would have been bullish now, guys, the market retraced and could have easily continued further bullish like this. But this swing momentum over here, guys, this you can see this swing momentum changed the whole perspective from being bullish to bearish. And you can see this swing momentum here which formed a chalk over here, clearly changed the whole perspective, guys. So this is the chalk formation. And you can see again the market retraced towards this 550 levels. If you consider this swing momentum over here or this high over here, you can see this is a 550 level and the market retraced towards the downside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this, so the common point between this here also the market didn't reach the 100% move, because you can see this kind of momentum, guys, where the market is all moving in a sideways with no clear directional basis. And again here you can see the market here forming some sort of support over here. So in case you can see if you try to plot the VWAP levels, anchor VWAP levels, you can see this kind of huge bearish momentum where price again forming some kind of support at these levels. After this kind of momentum, you could have seen some sort of support, guys. You can see the anchor VWAP level not breaking towards the downside, following candle, bullish engulfing candle, as well as market closing above the 9 as well as 21 moving average, as well as the anchor VWAP level, and the price here consolidating, clearly signifying very bullishness, guys. So in case if you might have entered, taken long position, you could have entered here, guys, keeping your stop loss just below that candle. Or in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level over here. This is the 1.68 level where you could have easily targeted, keeping your stop loss. This was one beautiful trade setup where you could have taken, guys. See, but here there was no clear chalk formation, guys, for you to take long position, because the sentiment here was totally bearish only. And you can expect this kind of order block also here. You can see this is a 1 minute order block over here. So you could have exited once this order block level has been broken. And you can see this kind of consolidation clearly signifying some sort of bullishness where price is consolidating above the 200 moving average, above the 9 as well as the 20 moving average, as well as the above the anchor VWAP levels. And you could have exited once the price reached the daily VWAP level. You could have easily scalped that position as well, guys. And you can see after this 100% move, the market again formed a double top pattern over here, but clearly broke towards the downside, guys. Till here, the market sentiment is bullish only. You can see how the market here found some kind of consolidation. So the market would have continued like this, guys, the same kind of momentum. But you can see this kind of swing momentum over here. The same momentum happened here as well, clearly changing the market sentiment from being bullish to bearish. So this is the chalk formation. Initially, the market headed towards the upside, but this kind of swing momentum, you can see this kind of huge bearish engulfing pattern after this kind of bullish momentum, clearly signifying the bears taking control. In case if the market sentiment would have been bearish now, guys, after this kind of bullish momentum, the market would have continued further bullishness. This kind of candles would have never formed, showing that the clear sentiment of market is being bearish only. So if you try to plot the high of this candle, the anchor VWAP levels, you can see, or if you try to plot the fib levels here, guys, the high to low of this candle, you can see clearly this is the 550 level. You can see this is the 550 level where the market clearly faced some sort of rejection over here. And you can see this kind of huge momentum, guys, bullish momentum where price is taking support from this 200 moving average. what you could have expected is sometimes whenever the price takes support from this 200 moving average, now guys, the market would initially move like this with a very good momentum, or in this case, after this kind of huge bullish candle, the market would have retraced like this and further continue towards the upside, but shouldn't have broken the 21 moving average towards the downside. So if you try to plot the anchor wave up levels, guys, the high of this candle. So wait a second, guys. This is not what we. If you try to plot the anchor wave up levels of this zone as well as towards the low of this candle, you can see, guys, this both confluenced at this candle over here. So which broke this 921 moving average as well as this both anchor wave up levels towards the downside, clearly signifying bearishness. So you could have entered short position after this kind of break of this structure towards the downside, keeping your stop loss just below that candle, and you could have targeted all the way to downside. So if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, or you could have targeted the 1.68 level, or you could have targeted all the way to 2.6 level. You can see the market came all the way to 2.68 level. So 2.61 level or the 1.61 level, here you can see another support or the 100% move, or you could have targeted the weekly pivot levels. This is where the market rejected price over here and continued very bullishly. So we could have eliminated this kind of huge bullish momentum once if you could have seen this kind of dodgy candle formation at the weekly pivot levels. This is the weekly pivot level, guys. The weekly anchor wave level, not the pivot level. So you could have traded all the way to this zone, guys. This is where you could have easily traded 1, 2, 3, 4, 5, 6, 7. 7 beautiful trade setups where you could have taken, guys, where the price action was up to the mark. You can say as Sensex expiry, this was just a manipulation, guys. For people who might have entered here, short position with this kind of huge momentum, the market might taken out all those sellers over there. So that was just to target all those sellers. And you can see after this kind of huge bullish momentum also, the market was not able to cross this 200 moving average, followed by another reversal candle, which I've already mentioned you in live videos. Whenever this kind of sudden impulsive candles out of direction appears, it's just to take liquidity, guys, to grab that liquidity. So during this kind of momentum, guys, it's better to hold on to your trade and expect the trade to go in your favor direction, because you can see how the price action here was behaved, clearly signifying the market is bearish only. So this is about the Nifty 50 trade analysis, guys. You can see how the market here broke the 1 minute order block towards the upside, but was not able to reach this order block level, guys. If you consider this order block level over here, so you can see this is another order block level, and this was the fair value gap. But here the market didn't even reach this fair value gap also here. So this was the fair value gap, and this was 1 minute order block. So what I was expecting is the market might go and mitigate this order block and continue further selling towards the downside. But after this kind of bearish candle, it's where I thought it's the market sentiment has changed and the market is going to head towards the downside. And here is where I took the short trade itself, guys, and you could have seen you could have easily made a decent amount of profit with this kind of swing. And this is about Nifty 50 trade analysis, guys. So let's look into Bank Nifty trade analysis. In Bank Nifty, see, this is the weekly VWAP levels. This is the daily VWAP level. This is a green color line. Here it is the mid of the first candle, and this is the 5 minute zone, guys. So I usually plot these levels, and you can see the market uh, similar to Nifty after gapping up the market, showed some kind of bearish momentum. But here it took support from this 200 moving average, guys, which clearly signifies some sort of bullishness only. So you can see after this kind of rejection from this 200 moving average, the market clearly rallied up all the way to this level and even broke this high as well, which is a chalk formation over here. And the market retraced to this 21 moving average and continued further bullishness. But here the market momentum was not able to hold and even broke towards the downside here. You can see how the market clearly broke towards the downside. You can consider this to be a chalk formation. Even though the market didn't close below this level, guys, you can see the market came all the way, took support from the VWAP levels and continued day VWAP level and continued further bullish momentum. In case if the market sentiment would have been bullish, no, guys, here the market didn't close below this level and you can't consider it to be a chalk formation. But what I'm saying is that in case if the market sentiment would have been bullish, the market would have broken this demand zone, supply zone over here. You can see the market came all the way to this supply zone, and you can see this kind of huge momentum. The market retraced again, the market broke again, retraced, and this is how usually the market behaves in case if the sentiment would have been bullish. But you can see this kind of swing momentum over here with this bearish engulfing candle over here, which broke the 9 as well as 20 moving average towards the downside. This is where you could have easily taken short position, keeping your stop loss above that candle itself and targeted all the way to 200 moving average over here. This is how you could have traded. Or in case if you have missed out on this trade, guys, I think it's better not to take this kind of trade because it's very aggressive. You can see after this kind of trade, the market clearly changed the sentiment from being bullish to bearish, guys, which even broke towards the downside and closed below the 200 moving average. And again, the market retraced back towards the upside. But you can see if you try to plot the common point between this to the common point between this, you can see this is after 50 levels where the market was not able to cross these levels. This is the golden zone ratio where the market was not able to cross these levels and continued further selling towards the downside. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have booked your profits at the 100% level. This is the 100% move where initially you could have booked profit or you could have targeted all the way to 1.68 level. Here you can see how the market came all the way to this zone. This is the 1.68 level where the market came all the way to this zone. So short position here, guys, keeping your stop loss just above that candle and targeting the 100% move, or you could have targeted all the way to 1.68 level. This is where you could have targeted. You can see how the market kind of retraced and faced rejection from this 200 moving average and continued further selling towards the downside. And you can see here the aggressive selling over here clearly broke this low over here, forming another breakout structure. So if you try to plot the order block levels of this zone, guys, you can see since this is a doji candle, you should also consider the previous candle, guys. So whenever the doji candle is there, it's better to consider the previous candle also. So you can see how the market here formed an inducement zone over here. This is an inducement zone, guys. And the market kind of, with a lot of hesitation, came all the way to these order block levels. And you could have easily taken short position, keeping your stop loss just above that candle. And you could have targeted towards the downside. Or in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, or you could have targeted the mid of the 100%, or the 1.68 level. You can see how the market came all the way to 0.5 levels, the mid of the 100% or the 1.68 level, the 0.5 level, guys. Or you can just hold on to your trade. So this is where you could have easily targeted. Or you could have exited this swing momentum at the 1.68 level. You can see how the market here is clearly some sort of bearishness. And here also the market formed another chalk formation over here. You can see the market here found another breakout structure towards the downside. And if you try to plot this swing over here, the common point between this to the common point between this, you could have plotted the FA50 levels over here. This is the FA50 level. So in case the market faced rejection from this level, so in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, we could have targeted all the way to 1.68 level, the 100% move, or the 1.68 level. You can see here. This is where you could have targeted another trade in case if you might have entered short position here, guys. Short position here, keeping your stop loss just above that candle itself. I took my position here itself, guys. It's better to take your position there itself. I think though in Nifty there was Bank Nifty there wasn't much trade setups, guys. You can see this was one beautiful trade setup. This was another beautiful trade setups. After seeing this kind of support, you could have entered long position, but that's quite with a lot of experience only comes this kind of momentum, guys. It's not easy seeing this kind of support, but definitely if I would have seen or I would have taken this, could have kept your stop loss there and targeted all the way to this high or somewhere between that zone, I would have easily exited, but there is no proper exit. And you can see this kind of momentum where here the candle actually broke the 9 as well as the 21 moving average towards the downside, closed below this zone. Here is where I could have entered another short trade and you could have targeted all the way to 200 moving average over here. There are another short scalps where you could have easily taken, but it's fine, guys. I want you to trade based upon risk to reward ratio with a minimum risk to maximum profits, guys. That's what my motto here is to teach you guys. So I think there is no channel in YouTube which actually teaches you the way I teach you guys. So please try to make use of my videos very thoroughly. Watch it twice or thrice, only then you'll be able to understand. And watch every video of mine, guys. Every video of mine which I post you on daily trade analysis is really helpful. And if you want to progress yourself and become a profitable trader in future, you should definitely make use of my videos, guys. They're really helpful. So in case if you find my videos helpful, please like, share, and comment. Share with your friends and family, guys. Thank you.